Good morning, everybody. Today is September the 8th, 2022. My name is James Mason, and this is StockCast. Todd Derby won't be with us today. He won a little raffle at a company potluck, and he was awarded with the day off. So, yeah, it's just me today. So, let's go ahead and get into it. So, the big news is that U.S. initial jobless claims came in today at 222,000 versus the estimated 240,000. Now, prior it was 228,000, and this sounds good, but it's not. So the reason why this is not good right now is one, because how hot the market is, and already how much they've increased rates from the Federal Reserve. So they're going to have to just keep raising rates. I mean, they clearly have not slowed down the labor market. And of course, we don't all know, but just generally speaking, yes, these rates do take time to actually settle on the market and slowly make its impact. But when you're in the moment and the market is so hot that it just keeps growing and you're trying to slow it down, when you have good numbers that come in like this, man, that is not good. So I'm very bearish on the market right now, and I believe it's just going to keep unloading. This is just a little break. Yesterday was just a little break in the market, and it will probably chop around a little bit on the daily chart on the SPY, and I'll show you here in a second. But probably chop around in this little channel on the SPY and the daily before it decides to tumble over more. But then again, who knows? It could happen today. Also, keep in mind that Jerome Powell speaks in 5 minutes, and anytime he speaks, Wall Street algos tend to kick up. So let's go ahead and turn over to a SPY chart real quick. Let's see. All right. So we can see ticker SPY on the 5-minute chart, and we can see it's going down. It's testing this 200 EMA. Cool, whatever. Powell will probably start talking, and the crap's probably just going to end up all over the place. But whenever he gets done talking and things kind of settle down, I'll obviously have to take it from there. But hypothetically speaking, let's just say if he starts talking and it starts bouncing, trying to go bullish, then again, he could come out and pump this shit, and it's just going to piss me off. But let's say he comes out and does his job and doesn't try to pump FOMO in the market, and it just stays honest, and it just kind of does whatever, dances around in here. Well, I'll be looking for later, once on the 5-minute chart now. Now, this is just for day trading, guys. Keep this in mind. But these setups are so critical because these setups matter for every time period. But so we can see that we've already pulled back this much right here. And look at this MACD. This MACD is pushing down pretty hard. And it could stretch a little bit, more lower right here. But what I'm kind of expecting, since we're kind of dancing around this 200 EMA, is kind of find a little short-term bottom on the SPY right in this range, wherever that may be, bottom out, and then come up here and just kind of play around somewhere in this range, as long as nothing crazy happens in the market. But looking at the MACD again, what I'm expecting is for this thing to kind of start to see these 5-minute candles kind of start staying the same size, and then they'll start to thin out, and it will look like it's going to probably go green. Now, it could go green, but let's just say if they don't go green, once they do that second wave down, that's where it will probably start to unload. So that's what I'm going to be looking for in the 5-minute chart for some day trading. Let's go to the 15. We can see the 15-minute chart right here. We're coming down to that 200 EMA. Will likely bounce. And we'll just have to see. Again, in 3 minutes, Jerome Powell speaks. So technical analysis in those moments will not matter, because the algos on Wall Street will take over and whip things in both directions. So now he's just speaking today. This is not an FOMC meeting. Keep that in mind, but still. So here on the 15, we can see that we're already testing this 200 EMA. So let's see from there. But kind of looking back at that MACD, that's, disregard the PPS value, but the setup on the MACD, you see how it goes into the second wave. That's what I'm talking about. So, I mean, we can look at the MACD right here, and while it was theoretically like pulling back, which, I mean, obviously was a pullback, but you can see the pullback right here. But just looking at the MACD, and then it goes thin, and then it goes, back red again, and we can see that difference in price. That's what I'm talking about. So let's kick it back to the 30-minute chart. All right, so right here in this 30-minute chart, you can see the 200 EMA is actually above that 86 EMA right here. This pink line is the 86 EMA. So looking at this green 200 EMA, we can see that it broke down on that 30. It's going to come down here, test this 86 EMA for the time being, probably find some little bounce out of Powell's little speech or talking, whatever the hell he's going to do. And being that's a 30-minute candle, hell, I mean, who knows what it will look like in the end by the time the show's over. So a couple more time frames I'm going to look at is, let's look at the 4-hour. It's crazy that I can zoom out on the 4-hour chart, and without stretching my chart over here, just on the normal setup on the chart, I can actually still see the pandemic. That crap feels like it's been forever ago. All right, so looking at the 4-hour chart right here, let me zoom in some. All right, so first thing I notice is this green MACD, which, is that signal that it was temporary bottoming out yesterday. And we'll just have to take that. We'll just have to watch this one, obviously longer because it's 4 hours. But again, guys, we have to see what the hell Powell's going to say. But overall, I mean, with those jobless claims being good, shit. Unless something else comes out on top of it to actually change the sentiment on, I'm just gonna say it, on what it should do. And you guys know how I always do say the market don't give a shit on what you feel like it should do. But theoretically speaking, well, not even theoretically speaking, textbook, with the situation we're in, there's better jobless claim numbers. They're it's just not good. So, all right. So this 4-hour chart, what we really have to watch out for, to my benefit at least, but if you're bullish, what you have to watch out for on this 4-hour chart is this 86 EMA crossing that 200 EMA right there. You're going to die if you're bullish and it does that. So if we do sell off here and then break these lows on the SPY at 3, let's see, hold on. I'm just going to say 338. Let me draw this line. not 338. What the hell am I saying? 388.21. All right, so on the 4 hour, break below that 388.21, and shit, we should go to Pound Town right here, son. Thing probably unload all the way into the 70s, fairly easy. Probably coming to next week doing that. Start testing those 360s again. So yeah, that is what I am keeping my eyes on today and what I've been watching all morning. So thank you for tuning in. I'm not done yet, by the way, but I appreciate everybody who is tuned in today. Let's go through the comments. Let's see what we got going on here. All right, S. John is the man. Man, I'll be honest, S. John, you make shit easy. If you guys are not reading S. John's comments with all these headlines, well, I don't know what to tell you. Let's see. All right. So not really too much going on in the comments today. Mainly just people talking back and forth. But man, this is a big setup right here, guys. But with that being said, like for big setups, I cannot tell you how tempting big setups are to just like nail it with a huge position. But that's honestly the worst thing you can do, because while the getting is good, if you get it just right, that pain is far worse. And I know you guys always hear me say smaller position sizes. And I don't think a lot of people actually understand like why I say that or what I mean. But like, let's just say you have a $1,000 account, okay? And if you dump that $1,000 into your trade, if it's good, then cool. But if it goes bad, well, you just took a fat loss, and that shit hurts. If you're trading options, and this is why I'm actually bringing this up. Now, if you're trading shares, that's one thing. But if you're trading options, those losses become devastating. Never go all in with your full account with options. You will quickly erase your entire account. So yeah, like if you have $1,000 in your account and you just keep going all in, you're gonna wear that account out. I mean, you're just gonna destroy it. But if you take $100 or even $250, hypothetically speaking, and you're just trading those smaller positions, I promise you guys, you will stress far less and just let them ride. If it ends up becoming a loser, then that's just what it is. But guess what? You can keep on. But if you took your entire account and that bitch becomes a loser, you're done. I mean, that is the simplest way to explain it. So I'm telling you guys, like smaller position sizes, like when you can just mentally think clearly because you're not stressed out, you can trade so much better, and you can let those things run and just keep growing your account. Like you could literally, I mean, just hypothetically speaking, and there's just so much other shit that kind of goes up in this, but I was going to say that you could literally like with smaller position sizes, you could let them burn off 100% and let those winners ride, and it'd be like you never even took a loss because your growth will keep going. Now that is hypothetically speaking, because it is going to depend on what the hell you're trading too. So yeah, that's the big thing that I'm watching today. We'll just have to see. Let me take a peek real quick. So Powell is talking right now, but nothing significant has kicked up yet. With the algos at least in the market. So we shall see. Let's take a look at the daily real quick. Okay. So I spoke about this yesterday on the show, and you can go back and watch that one. But this is what I'm talking about. Like kind of going out sideways and dancing around right here. This is what we need to watch out for. Now, a lot of times when it starts to push through this lower Bollinger Band line and it will ride down and then it will kind of take a little break and dance sideways, that shit usually gets people because they think that's a bottom and then it just tumbles over more. Let's see. All right. All right, guys. Well, that's pretty much all I have for today. We'll just have to see what the market does. I mean, these are wild times in the market. Like it's like I told the TTBB members yesterday. If you survive this market right here, or if you're just basically, if you're taking smaller losses because you're just like controlling your position size and not trying to like, you're not trying to like destroy yourself based off of what you're doing trading wise. Like if you're able to control everything with your position sizes and just like keeps losses like smaller, like through this market, you're doing pretty daggone good. Like this shit is hard to trade even for experienced traders, guys, because like looking back on this, it looks, oh shit, that's easy. Look at it just going down. I mean, I could have just took puts and just rode that down. I mean, that's all great on paper, but if we look back over like the last 3 weeks, there's not a single person here who would honestly say, oh shit, this market has been smooth. And if you are saying that, you probably don't keep up with the entire market. You might have just been riding one or two things. But just generally speaking, the market has not been smooth. So, all right, guys. Yeah, that is all I have for today. I appreciate y'all tuning in. Volatility, I mean, we're still in this weird range in the market where volatility is gonna, in my opinion, gonna start kicking up more. But things start whipping around and screwing up people's 401ks, and I think we haven't even began to see a downturn. So with that being said, I appreciate y'all tuning in today, and I will see y'all in the next one.